If you trade the euro dollar and you've seen this huge downtrend we've been in since mid-July, and you tried to sell this week along with the trend, and you got stopped out a lot of your trades because of the latter week bullish price action, then you haven't seen my last week's forecast video as we pointed out that we had a target which we hit, and then we'll sit on our hands. But stay tuned and hopefully we'll get you on the right side of the markets for this upcoming week. Okay, before we jump into the markets, let's go over our high impact news events that will bring extra volatility in the markets that could affect your trades for this upcoming week. So Monday, we have a US bank holiday, which is Columbus Day, and I won't be trading. It'll be low volatility for any of the dollar pairs. Tuesday, we don't have much volatility in the regular trading hours. 1 p.m., we have medium impact news as FOMC member Waller speaks. We come down to Wednesday, we have a pretty busy New York session. At 8:30 a.m., we have PPIs. And at 10:15 a.m., we have medium impact news, FOMC member Waller speaks. And 2 p.m., we have FOMC meeting minutes. So if you do hold any of your day trades into the evening, that might have affected volatility at 2 p.m. when FOMC meeting minutes release. Thursday, we have nothing for the euro or US dollar in the London session, but if you trade the pound, you will have GDP at 2 a.m. 8:30, we have core CPIs and CPIs and jobless claims all at 8:30, so we can expect a lot of volatility Thursday at 8:30 a.m. And that's all we have for Thursday. Friday, again, if you trade the pound, you do have Bank of England Governor Bailey speaking at 4 a.m. And nothing else high impact until London closed. Around 10 a.m., we have preliminary University of Michigan consumer sentiment for the US dollar. And that's a look at our upcoming high impact news that could bring extra volatility into the markets. Now let's go to the charts. All right, welcome back to Profits in Pocket YouTube channel. We're going to do a quick recap of last week and take a look at this upcoming week and hopefully get you on the right side of the market. So pretty early last week, we hit our low-hanging fruit target of 107.27 in a dollar index. And after that, you could sit on your hands for all pairs with the dollar in it as we were waiting to see if price would continue higher or reverse. And as you can see, we pretty much hit it spot on and then price reversed. So what do we have for this upcoming week? So this week, we could see prices move higher, but as in every other week, we could see an initial reversal before we see the push higher, as every other week we outline. So our bearish price action we probably can expect towards the beginning of the week, if prices to move higher, will be for prices to come anywhere in between the 105.78 level and the 105.95 level. So prices can make a bearish move into this area before we make our push higher. So possibly prices could retrace below 105.95 before making an attempt higher to reach the 106.75 level and possibly the high of 107.348, or we can round off to 107.35. So we could see the dollar this week reach for the 107.35 as an aggressive target and the 106.75 level as a low-hanging fruit target. That'd be a nice key level to see prices reach, and you can pretty much sit on your hands if we get a push up to the 106.75 level. And if you're more aggressive, you can take trades and hold out to the 107.35 level. Now let's look at this in a little more detail down on the daily chart. Monday, we had a lot of bullish price action. And by Tuesday, we hit our target. Wednesday, Thursday, and Friday, the market was bearish. So if you tried to follow the strength of the dollar without the context that we hit our low-hanging fruit target, then you would have had a hard time Wednesday, Thursday, and Friday trying to buy into the strength of the dollar. So this week we have two scenarios. If the dollar wants to reverse, the first scenario we could see on the daily chart is a push up into the 106.66 level. If the dollar is under a temporary reversal, we wouldn't want to see a convincing close above the 106.66-67 level. If we can't get a convincing close above the 106.67 level, then we can expect for prices to aim for the 105.66 level. So if we are going to reverse, 105.66 is our low-hanging fruit target. That's the key level we're looking for. But if we're going to move bullish, we want to see a beginning of the week bearish push, which shouldn't close below the 105.66 level. And if we stay in the area of 105.78 to 105.95, if we hang around in that area and then proceed to move higher, our low-hanging fruit target will be 106.97. So the 106.97 level will be our key level and low-hanging fruit target if we're moving bullish this week. Up to Wednesday, we could see price action move lower. But if we get a convincing close below this low of 105.66, then we're going to look to possibly be in for a bigger reversal and not move higher, taking out the high of 107.35. And that's our look at the dollar index. So we could see our beginning of the week push down to aim for the 106.66 level and a final target of 106.97 level. If we hit that, we'll sit on our hands and see how the rest of the week play out. Or we could make a run up to the 106.66 level. If we don't get a convincing close and price struggles there, we can target the low of 105.66. Now let's head over to the euro dollar. Okay, now we're on the euro dollar weekly chart, and as we can see, we hit our low-hanging fruit target. I remember last week we outlined these areas that price should run below, and we did that. So now let's see what we should expect in the euro for this upcoming week. So if prices are going to reverse here on the euro, we don't want to see a close below this 105.13 level. A convincing close below that level, then I'm targeting the low of 104.48 as low-hanging fruit target for the week. If prices start the week off and struggle closing below the 105.13 level, then we can expect a reversal and we'll look at the daily chart for targets. But if price is going to continue to move lower, we're going to first probably see it move anywhere from 10600 to 106.15. So if the week starts off pushing in between 10600 and 106.15, we can then look for prices to make a run towards the 105.11 level, 105.13 level, anywhere around that level. We can look for low-hanging fruit target and an aggressive target of 104.48 for the euro if we're going to move lower. So let's go down to the daily chart. And as we can see here, so if prices open during the week and struggle to close below this 105.11 level, then we could look for a low-hanging fruit target of 106.17. That's 106.17 as a low-hanging fruit target and a key level. If price start off the week bearish, struggle to close below the 105.11 level, then we can see a rally up to try to take out the 106.17 level. If prices is going to continue bearish price action, then we could see price action get to the 10600 level, to the 106.15 level before continuing our move down, where we'll have a low-hanging fruit target, 105.11, a more aggressive target of 104.48. And that's our weekly forecast for the upcoming week in the dollar index and the euro dollar. If you don't trade the euro dollar, you can use the dollar index analysis and forecast to help you with any currency pair that you trade with the dollar in it, whether it's the base currency or quote currency. So thanks for tuning in. If this video was of any value to you, I ask that you like the video And please subscribe and join the Profits in Pocket YouTube channel. And until next week, trade safe. And we'll be back next week with another weekly recap and forecast. Thanks for watching.